Once again, we're back, and Leon posted the question. He is looking at the US dollar, and the reason why I'm saying that, he says he does a lot of imports and exports, and he would love to know when must he pay for all these goods, because he pays it in dollar, of course, and that's quite interesting, because if you look at the chart here, and well, Leon, if we look at this chart, let's just see, first of all, I know there's always a lot of questions of investors talking about rand dollar, and let's have a look at this chart just to show you. That's from 2012 to 2014, and there was almost like a consolidation for a few years. Just draw a broad line there, and what happened over the last couple of years, Leon, I'll check to you your request in a few seconds from now, but I just want to show the viewers, if you have any idea that the rand will strengthen to maybe 5 or 6, it will be a lot of work to be done by the, let's say, the national government, and even the dollar needs to fall to pieces to make that happen, because that is the trend. From 212 weakening, you've got a few years of a consolidation, and then you've got a weakening trend again. And why are we seeing a strength at the moment? It is quite simple. If you look at this chart, there's your answer. That was the long-term support line here. Let's just get that. There you are. There's the long-term support line. We just rallied way above that line. It will probably come back, and it can come back all the way down to 15 Rand to come and test this line. But for the moment, it is coming back. And Leon, I would like to just put the following in your mind. This is what we call a falling wedge. Now, a falling wedge, unfortunately, is a negative pattern for the rand. That means that the rand can easily weaken. And this is now in the making from about middle March all the way till now. Now, although the trend is showing us a weakening currency in future, this may be falling wedge and turn into what we call a bullish flag if it breaks above, and there's your line. If it breaks above 1686, it can easily go above 17 Rand, and if it plays out, it can maybe go even as high as 1740. There's your line. Now, it doesn't look like it, but this rand is at the moment trying to find its feet, and it's all because the American dollar is under huge pressure because of their printing money and stimulus and all those things. If you look at this, even if you look at it, we can maybe go back, and I think at 15 Rand it will be a gift for people to take money out. At the moment, people that wants to take out money regularly, the trend is still in your favor. It tells you that we're seeing a weakening rand, we see a falling wedge. I gave you the level where it can break to the top, and if you are a trader, use your stop loss of 1620 if you trade that wedge, or even 1637 to protect your capital. If the rand breaks, it can easily go to that level of 1764 above that 18 Rand 12, and if you, there you are, 1827, and maybe even as high as 1860. Let's hope it doesn't play out like that. Let's hope the rand strengthen. For this chart, it just tells you weakening rand even for years to come. Maybe now a breather, but later on a weakening rand. Let's have a look at PPC. Ever is asking about PPC. Now, PPC's chart was quite interesting the other day because I liked the chart, but then I read about they've got almost 5.6 billion rand almost in a deficit or on debt. So that means they owe a lot of money. Now let's have a look here. There's the high, 8.95 Rand a while back, and maybe some of the viewers can remember. There was a company that was keen on buying PPC a few years back at, I think, at 12 Rand, and they rejected. They said, no, we don't want to sell the company. Now it is at 55 cents. Now, if you look at this, and ever, the simple thing is, let it work its own way out. Don't go and chase it. We've seen with Into Properties, these companies with huge debt, what can happen? They can go under. Now, if you look at this chart, there you are. That you'll see that as positive because it turned that resistance line into support. With all that debt, I will immediately give it a red flag, and I will say, if I want to look at the chart, at least that line, that will be 1.20 Rand, and only above 120, I know that it can take that strong resistance out, and then I can look at it. Why I'm so negative about just chasing the stock? Not now. The reason being is that PPC can maybe stay below this line for a year or 2 years, and now you buy it, and then you sit with the stock and you just wait and wait and wait. So I will say rather wait for this 119 to turn into a support, make use of a stop loss of 83 cents, and above 119, then you know it can go up 146 and 170. What I can say is if the South African infrastructure play start and the government does the right things and the policies change, this is one of the companies, if they can turn the debt around, this company can fly. But it's early days, it's in a consolidation. Don't put your hope onto it. Let they first sort out their debt out. And I always say, don't let they sort out their debt with your money. I can remember many shares that the company was great and there was no debt and everything was fine. And I'm going to name the company into properties. Everybody said beautiful dividend, wonderful properties, wonderful management. Everything was just wonderful. And what happened? The share got suspended because of all the debt they had. So let's have a look at another stock, Pick n Pay. Now, Pick n Pay, there you are. If you look at the company, it is in early days mode. It was 80 Rand in 2080. We've seen a beautiful reversal here. It went down. And this is just to show you. I just spoke to a falling wedge now. I showed you a falling wedge. There you are. I just want to show you a falling wedge is a formation that if it turns around, it gives you a sharp reversal move. There you are. There's the falling wedge. When it broke this line, and that's where it came into play, 45.11, it went straight up to about 49 Rand to reach that target, came back and rallied further. So it just shows you a falling wedge, sharp reversal. Now, Gary, if we look at this chart, looks like it's like a turnaround. And why? I've got a low, a higher low. I love this. Beautiful rally to the top. It looks like it gives these spikes. It will probably come back to pull back a little bit. You can maybe say it can pull back to this line. You are. It's drawing a line there. It can easily pull back to maybe 48.75. If you look at the chart, because what did it do here? It almost came back to that support line. There you are. When it pulled back, it came back to that line. So maybe we can get it back there, Gary. So I'll wait for it at about 48.67 or 48.60. Round it off. And I will make use of a stop loss of 46.47. And if it can then turn around and take out this high of 52.44, I know that we're probably seeing a V reversal here. And why do I say that? Look at that. There's the one leg of the V. There you are. And if it can turn around, it can give us another leg of the V. There you are. There you are. So then we can maybe see a beautiful rally. And our next target, if it gets going, is 53, 55.39, and even 57.52. So the company looks good. It looks like a turnaround here. And I think their sales are also up. The company looks a little bit better. Let's have a look at Alviva. I showed it a few weeks ago, and I said I like the stock. I think somebody asked me, I couldn't remember who. And at that point, the stock was working on a consolidation. Look at this ugly waterfall formation. We know that the waterfall formation usually gives us a little bit of a bounce. But now it's a different story. Look at this line. That makes me positive about this company. I mean, what do you want more? You want a low, you want a higher low, you want this share to take out that resistance. It did that. And I think it's maybe too late to just jump on the bandwagon at the moment. I would love if it can pull back to about 690. I think from 690 it can maybe give us another leg up. And if you look at this company, I mean, it's early days. I mean, and this is a internet related company, software, hardware. And what does it tell you? It was at a high of 26. And all the internet technology companies in the world are flying. They all at almost new highs. This one is only turning around. And that makes me a little bit positive about this company. So if you buy it above that line, make use of a stop loss of 580. And I mean, there's a lot of movement to the top. There's your first one. It just got there now, 822, then 961, and even as high as 1105. So I think it's early days for this company. The chart looks really good. Well, let's have a look at another one, Kumba. And Kobus is asking about Kumba iron ore. I mean, look at this chart. I mean, all the commodities actually had some good share rallies. And I mean, look what happened to Kumba. It went from 250 in March. This is the corona drop all the way back to 519. So it looks good to me. And what I can warn about is every time that it's got the steep rally, it comes back. Steep rally comes back. Steep rally. So maybe we're seeing this comeback. So I will say, let's wait a little bit. I know some of the other technical chartists will say, well, we just broke another line. I'm just always nervous. If a company from, let's say, March, whatever the case may be, double in price, I'm always nervous. And even if you take this fall out and you use that pre-line of 424 and we're now at 590, it just shows us we had a massive rally. But if I'm wrong, if the share gets above 51836 Kobus, it can maybe extend into a new leg, and it can maybe also give us like a flag formation here. There you are. If you look at that, that is a continuation pattern, and above that it can go to 530.39, 547.23, and even test a previous high of a few weeks ago of 574.89. Let's give you a stop loss. Stop loss is at 482.27 just to protect your capital, because I'm still convinced to say that these stocks had some beautiful recovery rallies, and sometime in future we'll probably see that the market, and people say it never it's never realistic to the normal economy, but I think this market needs to show us where is more or less a true level where the economy and the market more or less corresponds. Well, we'll talk again, and enjoy the rest of your week.